we are going to see auditing of limited companies. What is auditing of limited companies? Auditing of limited companies is a mandatory process to ensure that the company's finances and operations are in order. Let us first see what are the private limited companies and what are the public limited companies. Private limited company must get audited annually. The company must appoint its first auditor within 30 days of registration. The auditor will give an audit report and assess the financial statement to the registrar. The company must file its annual return within 60 days of the annual general meeting, which is called as AGM. The company must record its balance sheet, profit and loss account, and direct report within the 30 days of the AGM. These are under the private limited companies. If we go for public limited companies are must get annually audited. The auditors will examine the company's book of accounts, transactions and other documents. The auditor will prepare opinions on the financial statements. The auditor's opinion will be available to the investors and other interested parties. For these two, public limited or the private limited, the types of audit which is conducted are statutory audit, tax audit, internal audit and cost audit. What is statutory audit? A mandatory audit of company's account. Tax audit, an audit of a company's financial records to ensure compliance with the tax laws. Internal audit, an independent review of a company's accounting and operations. Cost audit, an optional audit to confirm that the company's cost accounting records are correct. Next, we will see how the audit of limited companies has been taken process. The objectives are, we will go and see the objectives, which is nothing but the qualification and disqualification of an auditor. To know the statutory requirements which are essential for limited companies. Understand the idea of an audit report and its content. Define the phrase whether it is true or fair and explain its relevance in the context of audit report. And he has to explain the concept of dividend and divisible profit and the statutory requirements with respect to that. Interpret the concept of independence of the audit. For this, as I said earlier, qualification of auditor is very important, and he done any disagreement with the companies, he can be disqualified as an auditor from that companies. The procedure to appoint auditor is the appointment of first auditor is under the section 224 of 5, and subsequent appointment of the auditor has been taken under the section 224 subsection of 1. Next comes the reappointmenting of retired audit. Sometimes the auditor is appointed after his retirement also. This comes under the section 224 bar of 2, provided that the subsection of 1b regarding sealing the audits and section 224, because he is not qualified for reappointment. He has given the company notice in writing of his unwillingness to be reappointed. Sealing of number of audit. This as a specific case, a person or a firm holding appointment as an auditor of a member of companies which he has paid up share capital of less than rupees 25 lakhs, 20 such companies. In another case, 20 companies out of which not more than 10 shall be companies of each which has to be paid as a share capital of 25 lakhs or more. For this, the remuneration is also there. As an auditor, as an advisor, he has tax matters, company law matters and management services too. Sometimes there has the right to remove the auditors. If he done any barber or any government disapproval has been done, he can be removed as an auditor. And some powers and rights also there for auditor in case we have to give a remuneration correctly. Thank you.